Good morning, everyone. This is Dr. Pooja Sharma, working as Associate Professor in Department of MBA. Today, I am going to explain the very important concept, final accounts. This concept, final account, is prepared by the companies to know the profit and loss of the organization. As the final accounts are prepared to determine the profit and loss of the companies, to know the financial position of the companies, and to assist the decision making for the stakeholders, for the management, for all the companies, for the employees, for everyone who are related with the companies, who are the stakeholders of the companies. Final account is the account which is prepared by the companies and will be displayed by the companies on the website of the respective companies each year, and this is compulsory as per the accounting standard 1. The final accounts should be displayed by the companies. The balance sheet, income statement, and the balance sheet should be displayed by the companies on the website of the companies for the stakeholders. Final accounts help the stakeholders like investors, creditors, management, employees understand the financial position, financial health of the companies, and the performance of a business. Stages of preparing the final accounts. Final accounts are prepared by the companies in three steps. First, trading account, and second is profit and loss account, and third is balance sheet. Trading accounts gives the information about the gross profit and gross loss, and profit and loss account gives the information about the net profit and net loss. And in balance sheet, the company balance sheet shows the assets and liabilities and capital position of the company. And these three statements are prepared stepwise. And the trading and profit and loss account nowadays known as the income statement also. And whatever the profit we have received in profit and loss we have calculated in profit and loss account, that should be used to prepare the balance sheet also. So these three steps will be the part of the final accounts. And in these are the three concepts of the trading and profit and loss account and the balance sheet. Trading account is prepared to know the gross profit and gross loss. As I told you, it is the overall profit of the organization, overall loss. And profit and loss account discloses net profit and net losses position of the companies, and actually the clear profit and clear loss of the companies. And the balance sheet shows the financial position of the business at the end of the year. These statements are prepared at the end of each year, and the purpose of these statements to show the financial health of the organization. And it is mandatory, as I said to you, it is mandatory under the accounting standard. And every company has to display the records and display all the records related to the final accounts on the website of the companies. Trading account is the account which is prepared to know the gross profit and gross loss of the organization. And it is the account in which we for the calculation purpose in trading account, we will use the direct expenses and direct income of the organization. As the direct income, or the one of the most important source of the income or the revenue is sales. And in preparing the trading account, we use the sales revenue for calculating the gross profit. And all the direct expenses comes in that, like direct material, direct wages, direct overheads includes in preparing the trading account. So this trading account is prepared on the basis of the direct expenses and direct income. With the help of these accounts, with the help of these balances, we can calculate the gross profit and gross loss position of the company. And here you can see the formula of calculating the gross profit. This is not the part of this is not the format, but you can use for the simple calculation of the gross profit. Sales, you will deduct the cost of goods sold from the sales, and then you will have the gross profit and gross loss position of the company. And for calculating the cost of goods sold, you have to add the opening stock with the net purchases with the direct expenses, and you have to deduct the closing stock from the total amount to calculate the cost of goods sold. So here you have seen trading account is prepared on the basis of the direct expenses and the direct income. Direct income, you will write the credit side, and in direct expenses you will write the debit side. Here, this is the format of the preparing the trading account. In credit side, you can see the sales amount or the revenue, or the debit side is for the expenses side. As per the nominal account, on the basis of the nominal account, we have to prepare the trading account. Debit side, all the expenses will come in the debit side, and all the revenues or income or gains will come in the credit side. Here you can see this is the format of preparing the trading account. In debit side, opening stock, purchases, and for calculating the net purchase, you will minus or deduct the amount of the purchase return, and net purchase will be written in the amount column. All the direct expenses like carriage, cartage, carriage in word, carriage on purchase brings the expenses which are used by the companies, which are incurred by the companies to purchase the goods, that will come in the preparing the trading account. Now, the other expenses, direct expenses like wages, fuel, manufacturing expenses, consumable store, school, water, gas, factory lighting, factory rent rates and taxes, work managers' salary, and the other direct expenses comes in the trading account. All the direct expenses will come in the trading account. When you are preparing the trading account, you have to remember the two important things. The debit side, all you have to write all the expenses in the debit side, all the direct expenses in the debit side, and in the credit side, you have to write the direct income. So you can calculate if the credit side is more than the debit side, the gross profit will come. And if the debit side means expenses is more than the revenue, then you will have the gross loss. So on the basis of the valuation, on the basis of the calculation, you will calculate the gross profit and gross loss amount. This is the next statement, profit and loss account. Profit and loss account tells the actual position of the company, or the clear profit or the net profit. And this is the statement which is prepared by the company to know the true profit and true loss of the companies, which is the company has made during a particular period, and that particular period is for the 12 months always. And it is the necessary that such all the expenses and incomes should be considered when all the expenses, indirect expenses and indirect income will be written in the preparing the profit and loss account. When the company has to prepare the profit and loss account, company has to consider all the indirect, company has to write all the indirect expenses in the company has to separate the expenses from the direct expenses and the indirect expenses. And the accountant, what he has to do, he has to decide that the company, what are the expenses and direct expenses that should be written in the trading account as we have prepared earlier. And in preparing the profit and loss account, we have to write all the indirect expenses in debit side and all the indirect income in the credit side. Here you can see the format of the profit and loss account. Profit and loss account in debit side, first of all, you will transfer the profit in the credit side, which you have received, which you have calculated in the trading account, the first account. And if the gross loss occurs in the company, then you will write in the debit side. As I said you, as per the nominal account, all the losses will be debited, all the expenses will be debited, and other expenses you will write here to carriage outward, a carriage on sales, establishment expenses, salaries, insurance, sundry expenses, printing, stationery, advertisement expenses. These are the some kind of some indirect expenses you have written here. Likewise, you will write the indirect income, discount received, interest received, commission received, and reserve. Like these are the some incomes. Reserve for bad debts and doubtful debts, this is the amount which is not used by the company in the previous year. So here you will write as a income, because you have deducted this amount from the previous year profit, and that amount is not used in the previous year. And because of this reason, you will write this kind of bad debts and reserve for bad debts and doubtful debts in the credit side, as it is the part of the profit which was deducted earlier but not used. So you will write here again, you will add here and again the profit. And here you have seen all the indirect expenses we have written in the debit side and all the indirect income written in the credit side. And here you can calculate if the credit side means income side is more than the expense side, so you will have the net profit. If the expense side is more than the revenue side, so you will have the net loss. In the previous two accounts, what I have told you that in trading account, you will write all the direct expenses and all the direct income. In the profit and loss account, you will write the indirect expenses and indirect income. So first two stages we have completed till now. In the next video, I will explain you about the balance sheet and the adjustment related entries. Thank you so much for this video.